Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, the Australian share market is pushing close to another record high. The prospect of resolution to the trade impasse between US and China has buoyed investor sentiment. Jason McIntosh from Motion Trader refers to the V-shaped recovery in equity markets as one of the great market comebacks. But what's ahead for the ASX 200?
And the big development on the charts over the last couple of weeks is that the moving averages have crossed to the upside. You can see I've got that blue circle on the chart, just identifying where that is. And so this is the first time in 3 months that we can say the ASX 200 is above rising moving averages. And that's important. And because the 50-day moving average is now above the 100-day moving average. And you can't have a bullish trend without that condition being met. So a really important thing going on there. Prices are also becoming established above the moving averages. So again, these are positive factors that I think can support higher levels in the maybe in the weeks to months ahead. One thing I think we should be thinking about is the potential for a pullback, at least in the near term.
Well, the gold price has stuttered since its record high in April. Once again, much has hinged on the outcome of global trade talks. Richard Weissman from Weissman Consulting says if the US dollar continues to come off, that's likely to be broadly supportive for the safe haven asset.
He never broke any serious support levels in gold. That is quite different than what we just saw in the copper chart, what we saw in the S&P chart. So gold kind of held its value despite weakness that was accompanying other charts in the wake of the Trump tariff scenario. So gold was very resilient, held its uptrend line, and I still am looking for the obvious retest of the old highs, which is 3540, 3550 area, and potentially moving on from there, 3600, 3750, all logical areas. The bottom line is that unless we break the uptrend, it's still a bull market. And although these prices sound really high, as long as there's buyers and there's demand, which there does seem to be at this point, the path of least resistance continues to be up, and it continues to be a market that should be bought. And especially if we have sharp corrections, which gold is kind of famous for, buy into the dips.
Copper, meanwhile, experienced a sharp drop in April, but more recently it has consolidated. And Richard Weissman says it's now broken to the upside.
Looks like the uptrend is back in force. The obvious next target, and I'm not saying we're going to hit it tomorrow or even on Monday, but eventually I do expect to see a challenge of that $5.40 a pound USD level that we saw before this whole tariff problem arose. So that suggests, as you said, supply issues, maybe even more global economic strength than what most market participants are imagining.
All right. If we do test that $5.40 level, where's the sort of upside resistance from there?
So, there's always the question when you get into this blue sky territory, what's the target? Round numbers are always great places for commercial hedgers, the producers, to put out hedges. So they tend to like round numbers, like 550 is an obvious level, 575, and dare I say it, even $6 a pound.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.